Morning, everyone, and welcome to the August edition of our Startup Resources series. I'm Lisa Bajornis, Executive Director of our Kentucky Innovation Hubs with KSTC, and we are joined in partnership with the KY Innovation team over at the Cabinet for Economic Development. So welcome to this month's series. For those of you that are series subscribers, of course, welcome back. And for those of you that are new, I welcome you as well. And I'm also going to give a quick rundown of our agenda today. So we do have a lot that is packed in today's agenda. We are going to very quickly turn it over to our topic today, which is hearing all about the newly launched Kentucky Angel Collective. And then we're also going to hear about the this year's MI2 Innovation Search. So we've got two topics for you today. And then, of course, we're delighted to hear from Blue North and our Hub Highlight feature. And I'll close it out with our usual announcements with events and opportunities in the next 30 days. As always, if you have questions during our keynote presenter, please go ahead and drop those in the chat, and I'm happy to facilitate those. Before I turn it over with introductions, I did want to also give a warm welcome to Malia Bowman. She is the Community and Event Support Manager with the Amplify team. So we welcome Malia to our innovation team here. Welcome. Very quickly, just a reminder that if you ever want to go back to any of the webinars that we have in our Startup Resources series, you can jump over to the KSTC site, click on the Our Initiatives menu. You'll scroll down and click on the Innovation Hubs, and there you can scroll down on that web page, and you'll see all of the past Startup Resources series webinars, and we've got them fully loaded there up through last month's July webinar. So those are there for your reference if you like. We do not have an update today from the Cabinet, but that gives us more time as we move right over into today's presenter. So we are very excited to hear from Patrick Henshaw, who of course is Managing Director of Render Capital, based out of the Louisville region, representing both Southern Indiana as well as Louisville. But importantly, the newly launched Kentucky Angel Collective is a statewide focus as part of the broader and larger U.S. Angel Collective. And so we are super excited to hear about the vision and mission of the KAC, how this is going to evolve within Kentucky and in support of Midwest investment opportunities, more fresh capital, which we always love, to back early stage companies, and certainly how the collective is bringing together capital, mentorship, and networks, obviously to fuel innovation, and in particular for Kentucky early stage companies. So I'm going to stop sharing and welcome Patrick. And if you've got some slides that you'd like to pull up, you can go ahead and do that.
Sounds great.
Wonderful. We do see them. And again, everyone, please go ahead. And if you have questions, just drop those in the chat and we'll connect with those.
Yeah, thank you, Lisa. And thanks for everybody for having me. Yeah, I just wanted to kick off here in a bit of irony. As you can see the Chicago skyline behind me. I'm in Chicago for the M25 summit this week. But this is what I saw on the subway this morning. It says, next stop, Louisville, Bourbon City. I love that we're promoting Louisville outside of Louisville, but we want to make this a place where we're more than just bourbon. And it's not just Louisville, it's broader Kentucky. And like Lisa said, please ask questions in the chat. I'm very excited to be able to answer any and all questions that you have. So as Lisa said, I'm Patrick Henshaw, founder, managing director of Render Capital, and recently launched Kentucky Angel Collective. And we're here to talk about kind of what that is and what it does, how it works. Again, like Lisa said, activating capital, community, and capacity throughout the Commonwealth of Kentucky. But before we get there, let me tell you a little bit of backstory on kind of how we got here. So a couple years ago, Render was a recipient of the Build a Scale EDA Challenge. And as a piece of that, what we launched was the Render Capital Angel Network. And in the last 3 years, we've deployed, and this is not Render Capital money to be specific, this is angel money. we've deployed about $3.5 or $4 million into startups into the greater Louisville region. And we wanted to be able to scale that because, as you guys very well know, the startup momentum is real, right? We're seeing some wins. Obviously, Alani Nu, we have Julia Reagan and her exit, and there's a lot of stuff happening. But we are still losing founders, deals, and momentum without enough early stage local activation for angel investors. And that's what we're here for. So where did we begin? Our Fund Zero, all the cool VCs now have a Fund Zero. So this is our Fund Zero story. We had the Louisville Community Fund, which I talked a little bit about, but that was a single LP vehicle, meaning one investor exclusively. That said, I want to change the landscape of Louisville and Southern Indiana's investing. That was a multi-asset vehicle. We had grants, we had crowdfunded equity matching, we had debt, we had venture debt, excuse me. We had equity, traditional equity, and then we had the Shark Tank style competition. And alongside of that, in addition to backing 120 some odd companies, relocating, this needs to say 16 companies, almost 1,600 now jobs created, over $100 million in follow-on funding. What we launched was the Render Capital Angel Network. And that was a dual-sided network. It was not just deal flow, but it was also education. Because what we also found in the super region is there's a bunch of money here. There's a bunch of incredibly smart people, but they have not been exposed as much to angel investing. So this Vulcan speak of what's preferred, what's participating preferred, what's a liquidation preference or a safe or convertible note or a ratchet or a full ratchet or all those kind of things. We want to educate both the founders and the funders on what a good deal looks like in terms of not being overly aggressive as an angel investor. And again, some of this is learned just by us, Render Capital, being a venture firm. We see often deals that we will never touch because an angel investor has come in and either taken too much equity or had too preferential of a treatment. Or, we had an angel a couple of weeks ago that came in, and as long as they owned any shares in the company, they were entitled to a board position. That's just not how the venture landscape works. So we want to make sure that people understand and are educated on both sides of the spectrum on what that looks like. So what is the Kentucky Angel Collective, and how does that level up and scale, like Lisa said, into a broader ecosystem? So the Kentucky Angel Collective is a piece of the United States Angel Collective, or U.S. Angel Collective. It originally kicked off to our neighbors to the north in Ohio. In 2023, they launched the Ohio Angel Collective. In less than 18 months, they had an angel signed up from every county in the state of Ohio. I'm hoping to beat that goal here in Kentucky. We already have 118 members of the Kentucky Angel Collective. But now what we're doing is we are launching the Kentucky region of the Kentucky Angel Collective. Again, wrapping up into U.S. Angel Collective. I'll get to more of that in the future. But Michigan has launched, and there's 3 or 4 other states right behind. And the whole intent is, again, for both sides, for the funders and the founders, for the founders to be able to have access to broader capital, right? We want Kentucky capital to go into Kentucky companies. But I'm sure, like our friends at the cabinet want as well, just like we do, we want other people's money from out of the state to come into Kentucky companies as well. So that's a bigger piece of how we're aligning there. And in the future, you'll be able to see the angels will actually be able to slice and dice based on geography, industry, stage, thesis, impact, whatever metric or whatever affinity that they have towards investing. Maybe they're a former doctor and they only want to look at med devices, or maybe they're a CPG or consumer packaged goods person. They only want to focus on consumer packaged goods. We want to be able to open that up more broadly. Yes, in Kentucky, obviously, but obviously to other ecosystems and regions as well. Because at the end of the day, some people might know this, some people might not. I had a first life looking for roadside bombs. So I'm an eternal optimist. And I have even though I say go Army, beat Navy, I still have an all boats will rise mentality. And that's what we want to be here for, is helping all those boats rise. So a little bit more detail on how the origin story, or kind of our thesis behind what we're trying to solve for here. One is speed. Many times founders come to us and say, hey, Kentucky capital is slow, or they drag me through a 6-month diligence process, or it seems like they're a Series A or B investor. That's great and that's fine. What we want to do is speed, and not speeding like illegally or unqualified speed, but we want to be able to help move angel deals through the pipeline. And I'll get to some of our targets for commitments in a second here on how we're helping founders move through quickly and angels activate quickly. Number 2 is communication. My last startup, this was a while ago now, venture-backed startup, I had 127 meetings with investors to raise our seed round. What we're trying to do is alleviate all of those 15, 30-minute, hey, can I have a coffee here, coffee there? We want to help aggregate that capital, so you have a critical mass of investors, not only that come and attend live pitches from founders who go through the process, but also that then if those angels can't make it, we also put it out through communication. We're actually recording those sessions and handing out decks and the diligence packet, which I'll get to in a second. We're increasing that, not only speed, but that transparency and trust through this communication lens. And then the access piece, right? Many times angels face high barriers to entry. Many angel groups require an upfront fee or a membership fee, or some groups even, like, I won't mention any names like Karitsu, but they will charge you like $5,000 to get in front of their angel groups. We want to lower all those barriers of entry. And so there's no fee to the angels to join. There's no monthly or annual membership. And there is no fee to the founders to go through and be able to pitch. Our target, now I'll say our target for the special purpose vehicles, which I'll get to in a second, and Lisa's going to keep me honest on time because I love talking about this stuff. But our target is a minimum of $150,000 of collective angel capital into a single special purpose vehicle, which I'll get into in a second. And again, a whole big piece of that is access to no minimums, access to a single diligence packet. Our team on the back end actually does diligence on behalf of the angel collective. Now, sometimes we'll pull in mentors or advisors or subject matter experts that are a part or a piece part of that, if they're subject matter experts, to help with that, or they're especially interested in writing a larger check into the deal. But we want to lower all those barriers of entry and make sure that angels have a really solid diligence packet. Again, that's not overtaxing for the startups or the investors. And again, all of this is foundationally built to add value, providing angels connection, providing founders connection, providing deal flow, especially again at that earliest stage of capital where traction might not be as what a seed or a Series A investor might want you to be at. And again, it's not a 5 or 10K check, which are great, but the target is again above $150,000 for those special purpose vehicles. So how does it work? So we're cross-sector in what we're putting in front of the angels. If you have a question on would we take it in front of the angels or not, please feel free to send me a note. My contact, there'll be a QR code at the end, but you can hit me up always at patrick@render.capital or patrick@KentuckyAngelCollective.com, or just go to KentuckyAngelCollective.com. Again, I'll have those links at the end. But we're doing everything from tech-enabled services to CPG to SaaS companies to anything and everything in between. You would call the Angel Collective a generalist investor from the outside. I will say, just because of the amount of capital that is needed for some industries, life science, biopharma are typically more difficult to get angel capacity around. That doesn't mean we wouldn't have a few angels that would take a look at it, but just longer life cycles and time cycles might make those more difficult. And again, at the end of the day, we want to crank through a bunch of deal volume. We want to speed that diligence process and have a packet that then the founders can have to take to other angel investors that they want to bring on board. And we want to make it simple to invest. So I'm going to stop right here for a second and talk about this special purpose vehicle concept. I'm sure many of you know it, But I'll use a render capital portfolio company as an example. I'm not sure if Stephen is on from Forecaster, which if you're a startup and you're not using Forecaster, you should be for your financial modeling. But God love Stephen. The Angel Collective and the Render Angel Network did not exist before he raised his first angel round. And he has like 76 individual investors on his cap table. That's great that the Louisville and the Kentucky ecosystem is backing such an awesome founder. I will tell you from an institutional venture-backed capital perspective, that is really difficult to work with in the later rounds of capital. Because every time that the Forecaster team wants to go raise, we've got to get 72 more signatures on a piece of paper, just because that's the way that it operates. So what we're trying to help do in the simplification of not only the investment vehicle, but future is we're using a company called Sidecar, SYDECAR. Their whole business model is to make special purpose vehicles easy and easy to use, easy to manage, easy to operate, and low cost, effective, efficient. I'm not saying they're the low cost leader, but it makes it much easier. And so what happens is all of those angels that want to invest in, let's call it Bajornis's, bakery or whatever. Couldn't come up with a better Bajornis's bourbon. Let's do that. That's got a better ring to it. Or Bajornis's Bordeaux. So all of those angel investors that invest in Lisa's company, they're not individual line items on the cap table. It's one special purpose vehicle. It's a single purpose LLC that allows all the investors to put money through Sidecar into Lisa's company. But on the cap table, all it says is Kentucky Angel Collective Lisa Bajornis Investment Number 1, LLC. And that's the only line item that goes on Lisa's cap table. And the beautiful thing for her is when she goes to other investors and she gets diligence done, it's one line item. So there's not 47,000 other people that are on there inside of that piece. And again, it's low cost. It's easy for us to transact through, and then it provides transparent reporting back through Sidecar for those companies. So how does the deal work? And I know I'm getting close on time, so please, if folks have questions. Oh, great, we got plenty of time. So I will pause here to say, please ask questions. I know I'm going fast, and this is a lot being thrown at you, but I love answering questions. So we'll get to those in a second. Hopefully, Lisa or Christine, somebody can manage those for us in the chat. So how does the deal work? I talked a little bit about this earlier, but our goal is within the first 90 days of a company coming in and submitting a pitch, a startup submitting their pitch to KentuckyAngelCollective.com/pitch. You can click pitch in the top right-hand corner. Is in that first 90 days, the startup is getting everything from diligence to the special purpose vehicle created to the diligence from the team, from our team internally, and then a pitch, a live pitch, recorded pitch if angels can't make it. But we had our first live pitch last Thursday, and we had 28 angels join the call. So then from that live pitch, then it goes into funding the deal. So we'll get signaled interest from those angels. They'll submit their qualified investment amounts, and then the SPV is launched and created. And then we just want to make sure that we're clear and transparent with angel investors too. It can be 3, 5, 7, 10 years before an exit for a startup. So we again are coaching and educating the investors as well at the same time, that this is not a short-term, quick fix money play. This is not a publicly traded stock where you can liquidate at any time, right? This is a privately held security that is held until exit or until secondary liquidation. So a question that we get a lot is, how does CAC make money, or how the heck can you do this? Sounds like a lot of good things, sounds like a lot of good people, but it can't be free. Yes, it is free because of sponsors like Dinsmore, as you can see. They and Render Capital, obviously, as well. But those and other sponsors to come help make it free for us to be able to not have a monthly fee or not tax startups that are coming in the front door. Now, to again educate, but also make this entire angel collective sustainable over the long haul, The Angel Collective charges, like a typical venture fund charges, what's called a success fee or a carry on the backside. It's not a success fee if the founder raises money and they have to pay a percentage of that. It's not a success fee if the investors invest, we take a percentage of that. It's only upon liquidation and exit, just like a traditional venture fund. 20% carry is then recycled back into the Kentucky Angel Collective. And how that works just pragmatically is, let's say the Angel Collective invests, we'll say $100,000 for easy math. I know I said 150 is a minimum, but we'll use 100K for easy math. If the Angel Collective invests 100K in a startup, and that startup sells, that pro rata share of that startup is now $200,000. So they double their valuation upon exit. The first $100,000 of that startup's exit goes through the Kentucky Angel Collective directly to all those shareholders, all those angel investors who invested. So they get all $100,000 back. Then that next $100,000, 80,000 goes, 80% goes directly to the investors. And then 20% goes back to the Kentucky Angel Collective, again, to make this whole vehicle sustainable into the future so we can keep doing cool stuff like this. Yeah, so that's basically it. We have a ton of information on our website. I am hopefully one of the easiest people to find in the world online. Please look me up on LinkedIn or ask Lisa or anybody else from her team how to get a hold of me. I am an open book, text, tweet, phone number, email. This was from an old deck. I'm not sure if there is any investors here, but founders, if you're here, you can take a screenshot or just go to KentuckyAngelCollective.com to figure out more. Lisa, what didn't I cover, or what questions do we have?
Great, thank you. There was a question around just clarifying the 125,000 minimum that you mentioned. I think that was in reference to the special purpose vehicle, but if you can clarify that.
Yeah, so the target for the minimum investment that the collective angels would make into a startup is $150,000. So I'll break that down more specifically. The SPV on Bajornis's Bordeaux's would read Kentucky Angel Collective investment number one. That's $150,000. Startup founder Lisa gets $150,000 cash. How that works on the back end is the angel investors can put in 5K, 10K, 25K, 100K, 125K, whatever they want as the top of the funnel for the SPV. And they're the ones that are declaring that investment, right? So they say on an individual basis, and I see the key horse question, Scott, I'll get to that in a second. They declare on an individual basis how much money they want to put into Lisa's startup. And then all of that capital is pooled into that pooled capital vehicle, that special purpose vehicle. And then all of that money is transacted. That $150,000 goes in one lump sum to Lisa's company. So the minimum investment for the angels is very different than the minimum target for the investment in the company. I hope that clarifies the question, or clarifies the answer. And then Scott Stuckey asked, does this have any positive or negative effect on Keyhorse? Hopefully a positive effect. Keyhorse has some really interesting quasi, I'll let them speak on this, but matching vehicles. Depending on the region of the state that you're in, it's either a 4-to-1 or 1-to-1 match, as far as I understand it. Somebody can kick me underneath the digital table if I'm wrong. But the long story short is we want this to be catalytic for unlocking more capital, whether that's Keyhorse's capital or other angel investors. We want this to be a momentum builder. And so, yes, ideally, every company that comes through the Kentucky Angel Collective is eligible and able to use the Angel Collective capital as any match dollars or requirements needed, whether it's Keyhorse or other grant or investment programs that they might be a part of. That's a great question, Scott.
Okay. And then another question that has come in, is there a maximum in terms of the amount that is pooled together to be invested?
Yeah, great question. While there's no set or specific maximum, I would say it likely depends on the company themselves and the valuation that they're raising. So just kind of taking you 30,000 feet up in the air, a startup typically, when they go to the angel or venture alphabet soup trough for money, Series A through G or H or whatever, you're typically going to give away, especially in pre-seed, seed, Series A, Series B, Series C, somewhere between 10 and 30% of the company for that whole lump sum of that one tranche of financing. So your pre-seed or your seed or your whatever. What we don't want to have happen is somebody raise, on a $6 million valuation and on a $6 million post-money valuation and raise $4 million, and the founders don't have enough equity in the company for future rounds. And frankly, to keep them incentivized and keep them in the fight for them to make money, right? So while there's no protracted minimum, I would say, and I'll use basically the last 3 years of the Render Angel Network funding that's come through. The average, I would say, round size for most of these angel rounds has been somewhere between 250K and 750K. So again, it just depends on the company, but there's no legal limit. As long as they're accredited investors. Again, we only work with accredited investors today, but there's no legal limit to the amount of capital that you can put through that vehicle. Good question.
Okay, great. Let's see. The next question is that I believe you indicated the angel investment can be early seed money, but can you clarify if the funding typically occurs in the last half of an equity raise, the last 20% of the equity raise, or something else?
Yeah, great question. We have no requirements at the Angel Collective. So you can come in whether you're first starting, whether you're closing, whether you're in the middle, whether you have one open from a year and a half ago, or you're targeting to plan one a year from now. There's no, protracted timeline that we have. We just want to try to be transparent that it's about a 90-day process from, hey, I put my name in on the website to SPV, capital, angel, pitch, diligence, all that stuff completed. So obviously, we can try to move faster, but it's difficult just because 118 people moving them all in one direction on the angel side is not exactly quick. But ideally, you're not coming to us with like 2 weeks or a month when your round closes and saying, hey, I need 500K or the company's going bankrupt. Like, that's probably not a good idea. But the short answer is come to us anytime.
Good. And just to clarify again, this is for potential high growth companies poised to sell.
Yeah, so that is a really good question. So the answer today is yes, it is high growth venture backable companies. Our target in the future as we build consistent critical mass is that it would actually look a lot much more like the investors that we had in the Louisville Community Fund for our crowdfunded equity match program. Right. If you go back and look at what Render is invested in from the community from a match perspective, like please and thank yous in there, they might not exit, right? But they actually raised on a revenue share model, which is super interesting to think about. And so all that to say, today the target is high growth, liquidity, call it 5 to 500x multiple companies. But we're hoping in the next 12 to 18 months, as we continue to build the gravity of angel investors that want to invest in stuff other than just high growth companies, that we'd be able to open that up more broadly. But that's a great question.
Great. All right. I believe that you have answered everything that has come in for us. So, Patrick, thank you so much for sharing this very exciting news. We know that you are working to overcome those problematic areas of speed, communications, and access. So we appreciate your leadership, certainly. But even more importantly, we are so thrilled that this is for all Kentucky potential, venture backable companies that are looking, as we've just mentioned, poised for exit. So appreciate your leadership. And of course, we want you to think of any of us on this call as that pipeline for those referrals to make sure that we've got a lot of good deal flow from Kentucky being looked at from not only the Kentucky Angel Collective, but as well as those in the Midwest through the U.S. Collective. So thank you for sharing that today. Yeah.
Thank you very much again, Lisa.
And we'll look forward to your slides afterwards so that we can share the wealth of new information.
That sounds great. Have a great day, and thanks again for having me. Thanks, everybody. See ya.
All right.
Bye.
All right, friends. Hang on one sec. Excellent. All right. Moving along in our agenda, we're doing great with time, and I am really pleased to introduce you to Summer Dixon. If you don't know Summer, she is a longtime fixture in the entrepreneurial community in Louisville, but she is also the Chief Operating Officer for MI2, the Metals Innovation Initiative, and she's going to just tell us about their newest opportunity, the Innovation Search. So I will stop sharing and welcome Summer. Thank you for joining us.
Well, I really appreciate you having me. Good morning, everyone. Um, I'm excited. I'm excited about lots of things, but I'm excited to share the opportunity that we have with you today. It's bringing together innovators with one of our state's largest industries. I mean, it's metals industry is the third largest employer in the state, and we want to keep it that way. And so, with that, we have an innovation search. It's a competition that we are working through right now. That applications are open, and I will link the information in the chat just as soon as I'm done. I can't multitask, so I can't talk and link. But the competition, one of the reasons I'm so excited about it this year is it has two tracks. So first, our industry partners, so think our metals companies, are going to submit real world problem statements. It's the challenges they face that they're looking for creative solutions. So kind of think of that as a reverse pitch. But secondly, we have the innovators, entrepreneurs, and researchers, people like you and the people that you support will submit solutions. And they may not necessarily be for those particular challenges, but it's more of a traditional search. The applications are open now and through September 4th. The exciting part is that the finalists will pitch live at the Kentucky Industry Conference in late September in Lexington. And so this structure is super intentional. Our goal is to make sure that innovation is demand driven. So not just like great ideas that are in search of a problem, but real problems matched with real solutions. We are attempting with this structure to create a matchmaking engine between the industry needs and our innovative partners. So ultimately, this will spark partnerships and pilots. And in fact, it did. We did not have the dual track last year, but last year our winner, I know that he's added 4 or 5 clients to his, and we continue to make connections for him because he's fabulous. It was Pascal Tags, if you don't know. So if you are supporting innovators, yeah, I love that a Louisville company, I have to say, I love that a Kentucky company won. So if you're supporting innovators, here's why they would want to be a part of this. So the conference in and of itself has served as a launch pad for partnerships and customer relationships. But the finalists will get to showcase their work in front of industry leaders and statewide decision makers. They will walk away with exposure, with market validation, and with new connections. And winners this year will each for each track have an opportunity at $5,000 in prize money. So if you represent an innovation hub, I would invite you to please spread the word, encourage your network of entrepreneurs, researchers, and creators to apply. And as always, I am here. I can answer any questions that you may have. I know I'm speaking quickly, but happy to answer questions and, of course, provide support and provide additional information.
Great. All right. Thank you so much, Summer. So to be clear, you've got both those businesses, established businesses that are in the metals industry who are submitting some big technical problems that they need help with. So that is the one track. And then, of course, we want to see early stage companies that are really espousing what it is they do best in an innovation fashion in the space and be able to promote that in what they do. And then you've got your matchmaking engine that's going to take
Yeah,
place. And so hopefully we've got some great problem and problem solving that is coming together. And for that early stage company, a wealth of resources and opportunity that will hopefully follow from there. So we look forward to
absolutely.
that.
Yeah, and
And
Lisa,
Summer,
actually,
remind us, oh good, you've dropped the link where we can get more information in the chat.
yeah,
Perfect.
and I'm glad you asked the question that way because if I remember correctly, the vocabulary used were like large technical. I wouldn't limit it to just large technical. if that makes sense. Like, for example, right now, one of the largest pre-competitive issues in the metals industry is talent workforce. How do we engage those that are outside of the metals industry? How do we keep engagement with that's not necessarily large and technical? So
Right.
I'm hoping that folks think with a really open mind
Very
about,
broadly. Oh,
yeah.
I am very glad that you mentioned that. So that's good for us to know, to think much broader in terms of just large scale type issues and problems that any complex company would face. And then what are those potential solution providers in an innovative fashion that can potentially solve those? So very good point. I'm glad you mentioned that.
Thank you.
Very good. All right. And remind us the deadline for the applications.
September 4th.
September
And
4th. And then the event in Lexington is
October 27th through the 29th. I don't know the date yet
okay.
for the pitches, but it's the 27th.
Okay, very good. So about a month or so after that. Summer, thank you so much for sharing that opportunity. And we will certainly, I'll be sure to get more information out to all of our attendees that we'll attach. It'll be in our Slack. It'll go out with the email that follows this webinar so that we can help to share that opportunity among all of those clients that we serve. So thank you.
Thank you, Lisa. I appreciate you.
All right, very good. All right, and then before we get to some of our final announcements here, we always have a hub highlight where we have an opportunity to showcase the latest and greatest that's happening with one of our innovation hubs. And we are joined today by Reese Watson, who is Chief of Staff for Blue North in our Northern Kentucky region. And so welcome, Reese. If you want to go ahead and share your screen, and we look forward to hearing what's happening up there in Northern Kentucky.
Perfect. All right.
Very good.
Hopefully that's out.
Yep.
Thank you for the introduction. And then I can give a couple updates and some upcoming things we have going on at Blue North. Just to start out, for anyone who's not familiar with Blue North, we are the innovation hub up here in Northern Kentucky. We cover 17 counties going all the way from Oldham over to Lewis. Our mission is to be that front door for entrepreneurs, be the first place they can go for resources and connections to accelerate their growth around here. And then our goal from that is to really champion them and get our entrepreneurs recognized on local, regional, and national stage. And we want to be that catalyst for the growth in the region and for the state as a whole. And while we work with all entrepreneurs, we want to keep our focus on those high growth startups that are getting ready to scale. And then we also work with entrepreneurship through acquisition. We actually have a group up here called Cincy ETA, which is really active in that space. And then also with companies and brands that have that potential for national reach. So that can be CPG, food and beverage, and some interesting ones like that. I think our biggest update this year is Spark House. We're getting really close to opening on September 1st. Spark House is our innovation hub, our physical one that is 50,000 square feet right in the heart of Covington. And this will be our home for the community we've been building over the last couple of years for founders, investors, and entrepreneurial support organizations. So this space will offer everything from workspaces, meeting and event venues, public cafe, which will actually be run by one of our entrepreneurs and high growth companies we've been working with called Better Blend. So have some good smoothie bowls and coffee and all that. And then member add-ons too. We want to be able to service everything a startup might need at this stage, whether that's storage, mailboxes, and more. And little note at the end here, we have also grown our team this year. We have Mitko, who is our Spark House operations manager. He's been great so far. He'll be running the building day to day, but his background is also in community. So we're excited for the entrepreneurial community he'll help us continue to build, and one that will be very central in this location. The next update is the Brink program, kind of piggybacking on everything Patrick was leading to earlier on this gap in the early stage funding. So the Brink program was piloted last summer. We just finished up our first year, It's a selective 90-day sprint for Northern Kentucky's founders to kind of validate and accelerate their ideas. So that looks like is a $25K investment from us. And then you get paired with a traction advisor where you have that accountability, you can set milestones, and startups are really focused on at this point, either building the product, working with customers, and getting that traction to continue raising after that, maybe going to the Kentucky Angel Collective from there. So in our pilot year, we supported 8 companies that you can check out on the left side here. We deployed a total of $230,000, really laying that foundation for the program to continue growing, and maybe even seeing that physically grow at Spark House and really plugging people into the community and getting them that really early support for their fundraising journey. And then kind of our other funding vehicle with Blue North is the Northern Kentucky Entrepreneur Fund, which is a grant program we manage. That one is non-dilutive funding to more smaller entrepreneurs, small business-based companies. I'll highlight these 3 companies on the right, which were our most recent ones for the last quarter: Jukebox in Bellevue, EcoShell in Covington, which was actually one of our Brink companies, and then Spork down below. And our main goal with this is to really help them scale, get that next step they need through the grant, whether that's hiring somebody, getting a piece of equipment, getting community partnerships and things like that. Since the inception, which I believe was around 3 years ago, we've awarded $500,000 in grants to 40 Northern Kentucky-based businesses to really, again, bridge that funding gap. And something fun we did this year back in February was partner with a distillery up here in Northern Kentucky, New Riff. And we had this custom bottle you can see right here in the middle on the Entrepreneurial Spark. And a percentage of profits went right back to the Northern Kentucky Entrepreneur Fund, raising a little over $10,000 to support some other Northern Kentucky businesses. And then as for our upcoming stuff, something I've got to work on over the past couple of years is this collegiate talent pipeline, which started out as summit events, kind of focused on venture capital. Gave a little blurb on that. This past year, we had 70 students from 11 universities come up here for the day, get to meet people like Kelby Price, and learn about what the startup and venture capital scene kind of looks like here. And what I found was a lot of students coming were actually trying to learn VC from the founder's perspective. So this fall on October 24th, we're bringing together about 15 universities, hopefully a little over 75 students, where this will be more of that front door to entrepreneurship. So we want to have this one more focused on what it takes to be a founder. Maybe you want to work at a startup. What does go to market look like? Maybe you're a developer. Really just get them connected to the startup scene as a whole. So that would be another all-day summit event, and then hopefully we can kind of start building events off of that, and getting students introduced to the ecosystem before they're looking for those post-grad opportunities. And then one of our biggest events of the year is Brand Fusion. This will be on October 6th and 7th during Startup Cincy Week. So that'll be a big week up here following our Spark House opening as well. And Brand Fusion has been going on for 10 years now. It connects leading brands with high growth startups. So it's really kind of a problem solving challenge. And there's very creative matchmaking for this. We host it at TQL Stadium up here in Cincinnati. So that's always a fun one. So that'll be a big one this year. Hope to get a lot of big companies and startups. So more to come on that. That's all I've got today. I'm sure we'll have plenty more events and updates coming as we get closer to Spark House, but appreciate you all taking the time.
Yeah, thank you so much, Reese. We're thrilled to see all that's happening up in the Northern Kentucky area, particularly as it, as you shared with us, both investment capital programming as well as non-dilutive capital programming, equally as important. And the way that you've addressed a number of your different students, very innovative to look at a programming track that's really around teaching students to be, venture capitalists at some point and to get that unique perspective early on. So we love to see that. And of course, we're cheering on the sidelines here and cannot wait for the grand opening of Spark House and look forward to seeing that. We've watched it over the past year and a half or so, and excited for that grand opening and supportive of all that you do. So thank you so much.
Thank you.
All right. We will round it out here. Just a couple of announcements to make sure that you've got on your calendar. Of course, every Wednesday at 8 a.m. Central Time, Sprocket hosts their coffee hour, bringing together founders with each other for some great peer networking and opportunity there in conversation. This week, Amplify is hosting their Sales Week, so it is a number of excellent sales programs and speakers at various different times and locations. SOAR will be hosting their SOAR Summit, their annual SOAR Summit. That is next week, August 26th to the 29th over at the Corbin Center. I look forward to a panel of a number of Innovation Hub representatives, and we'll be talking about our work and the resources and results that we've been providing for that SOAR Summit. Amplify is hosting again their monthly Venture Connectors. That falls on Wednesday, September 3rd at the Kentucky Science Center. This program, again, September 16th, you can find us here. And then on September 17th, 2 events. Game Change is hosting their summit at Lexmark at 9 a.m. there, the 17th. And the Regional Tech Council down in Bowling Green is hosting their Emerge Tech Summit, the inaugural Emerge Tech Summit. That'll also be on September 17th at 9 a.m. Eastern Time or 8 a.m. Central over at the WKU Innovation Campus. And so that's a quick rundown. I do have one more that came in. Startup Weekend Louisville is going to return in September 19th to the 21st. So that's Startup Weekend. And of course, we will have a copy of or recording of this webinar available for everybody. So thank you all so much for joining us, and we'll see you right here again next month. Have a great day. Thanks.